Hey everybody, welcome back to another Freight Broker Bootcamp Live. If you're catching this on replay, thank you for joining me. Hit me up in the comments, #replay. I love to hear from my replay folks. For those of you that are joining me live, you're in for a treat today. Today, we're going to talk about, we're going to talk about 3 things that every freight broker needs to know about their freight broker bond, okay? And this is so important that I decided to invite a guest expert onto the show. We rarely do this, right? So I'm bringing somebody in from the surety bond industry to really kind of dive deep into the kind of the reality behind freight broker bonds, as it relates to rates, as it relates to, claims, as it relates to a variety of different components that you need to understand. So I'm going to be bringing that person on here shortly. But before we do that, all right, let me know in the chat box. Give me the city and state you're logging in from. Give me a heads up as to where you're logging in from. I'll try to, try to give you a quick shout out. And then we're going to bring my guest on. We're going to go through those. Again, today we're going to talk about 3 things that every freight broker must know about their broker bond, okay? So hit me up in the chat box. Let me know the city and state you're logging in from. We're waiting for a few people to get live. And then just to give you a little bit of an agenda, we're going to do the shout outs. Then we're going to do the training topic interview with the bonding expert. And then we are going to do, at the end of that, we're going to do live Q&A. Okay. So for those of you that stick around to the end, we are going to do Q&A. So you can ask my guest any questions about bonds, surety bonds, BMC 85s, BMC 84s, any of that stuff, right? You'll be able to ask any of those questions. And then any other questions you have about getting started as a freight broker or getting started as a freight agent or any of those questions you have for me, we can answer at that time too, okay? So I'm excited that you guys are here joining me today. Thank you so much. Quick shout out to Toussaint Landy. Welcome, Cynthia Moore from Maryland. Let's see what we got. We've got Jomo Mighty from Fort Lauderdale. We got Dakota 0412 from Dallas. We got Paul Smith from Phoenix. We got Eric Vall from Santa Clarita, California. Eddie Reed from North Alabama. Jacob Jose from New York. Red Johnston from Dallas, Texas. Noah Solomon from Wayne, New Jersey. Welcome, Noah. Natasha Whitlock from Rock Hill, South Carolina. Again, Val from Santa Clarita is here twice. Winnie Song from LA in the house. Thank you so much. Ray Sean Hutchins from Cleveland, Ohio, just down the road from me in Buffalo. BC Transport from Delray Beach, Florida. Demetrius Ashbury from Virginia. Paul W. from Southern Maryland. Priscilla Onia from Sacramento, California. California's taken over today. I don't know where my Texas people are. They're normally crushing it. Michael DePietro from Fort Lauderdale, Florida. Grenda Arena from Houston. Here comes Texas. Woodhaven, Michigan. We got Akishan from Woodhouse, Michigan. Frank Brito from Brazil. All right, so now we've got another continent in the house here. Okay, Christina Holbert from Belton, Missouri. Will West from Rhode Island. Kellen Weaver from Chicago. Man, we got people from all over the United States, and frequently you have guests from other countries. We've got people from India, the UK, Australia, Canada. We have South America. So we're very, very fortunate. And again, thank you for joining me today for this Freight Broker Bootcamp Live. For those of you that are just joining and playing catch up, today we're going to talk about 3 things that every freight broker needs to know about their bond. And I'm going to be honest with you guys. I know a little bit about freight broker bonds, okay? But I don't know a lot. I know a little bit. I know just enough to be dangerous. Here's what I know. If I knew 10% of what my guest expert knows when I first got started, I would have saved a lot of time, a lot of hassle, and probably a lot of money, okay? So I want to welcome to the show my guest. The gentleman's name is Vic Lance. Welcome to the show, Vic.
Yeah, thanks for having me on, Dennis.
Yeah, thank you for joining me. We met a while back, and I really kind of did a little bit of due diligence and kind of vetted your company. And so the reality is your company, Lance Surety Bond and Associates, has been around doing bonds since 2010. Is that correct?
That's correct.
Yeah, and you specialize in transportation bonds, and you've helped thousands of brokers get their bonds.
That's correct. That's because we do bonds nationwide, all 50 states, and we write all types of bonds. But Over the past decade, we really have honed in on the transportation, specifically the freight industry, and that's become our bread and butter.
No, I love it. Perfect. Well, that's why I had you on here today, because I'll be honest with you, I get tons of questions about bonds because a lot of my audience are brand new brokers or people that are considering becoming brokers or agents, and they're kind of assessing the cost and the steps and the process of starting their business, right? We all know that freight agents don't need a bond, but freight brokers do. But depending upon who you talk to, you get a bunch of misinformation. So today we're here to talk about the facts, right? We're going to talk about three very important things. There are tons of things you need to know about your bond, but these are the three most important things you really need to understand about your broker bond if you're actually going to be a broker, okay? So for those of you that are interested in becoming a broker and you haven't got your bond yet, maybe you haven't filed for your authority, you got to lean in on this, okay? You really got to pay attention and just know we're going to do Q&A at the end. But also for those of you that already have your bonds, I think you're going to learn something today. And you may want to take into consideration the fact that if you put some of these things to put into play, you might be able to save, again, some time, hassle, and or money with your bond, even if you already currently have one. So real quick, Vic, why in God's name did you choose the bonding industry? What was it that pushed you towards that? Because I know, that's a niche. What I love about it is it's really niche, but tell me a little bit about why you decided to start, Lance Surety Bond and Associates.
No, that's a really good question. I know we don't have too much time here, so I'll be brief, but I actually have a different background. After college, I became an officer in the Marines, did combat tours in Afghanistan, Iraq, and I knew I wanted to become an entrepreneur. And towards the tail end of my time in the Marine Corps, I got my MBA from the University of Michigan. And during that time, I researched different industries, different opportunities, and I had some connections in the bond industry. And I saw the potential there. I liked the opportunity of growing a book that's based on renewal. I liked working with other entrepreneurs. So the idea of working with other entrepreneurs, which is really our client base. It's people that start their own business, and it really appealed to me to jump into the bond industry and give it a go. And so shortly after getting my MBA from Michigan, I'd started the process of creating a website, building out content, but had prepared myself to kind of hit the ground running and begin operations, shortly after, graduating from Michigan. So.
Love it. And that was around 2010?
That's correct. Yep.
Cool. And since then you do bonds in all kinds of different industries, but tell us a little bit about how you got into the freight broker bond space. Cause now you're in a niche within a niche, right? I'm a big believer as an entrepreneur and as a marketer that riches are in niches, but you went niche, then niche again, right? So I talk about this a lot when when I'm talking to freight brokers and freight agents trying to start their business. I'd love to get your perspective about niche marketing when it came to your business.
Yeah. I mean, there's two things in that answer. One, my occupational, especially in the Marine Corps, was logistics. So I've always been interested in the civilian sector, logistics and transportation, but specifically around 2013, MAP 21, taking that bond from a $10,000 to a $75,000 bond. That's where things really changed for us, because we had really strong relationships with a number of bond providers that were willing to take a stab at writing that bond when it increased 7.5 times the original $10,000 bond, which I believe was what it was back when you first got bonded. And with the bonding, there's a reason it increased, and that increase of coverage from 10 to 75,000 caused a lot of carriers that were writing the $10,000 bond to say, we don't like the claim activity, we don't like the risk, so we're gonna take a pass on this $75,000 bond. So there weren't as many carriers willing to write the $75,000 bond because of concerns with claims. And we had some really strong connections with carriers that were willing to kind of be at the cutting edge and put together programs that they felt made sense. And a number of them are still writing the bond to this day. So the carrier relationships and our interest in that industry are kind of what drove us to put so much emphasis and effort into the freight industry.
What I like about what you're doing, Vic, is that you don't just represent one underwriter, right? You're more like an agency that has a variety of different bonding companies that you can kind of shop it with based upon the different criteria that person has. Maybe maybe they don't have perfect credit. Maybe they, whatever the case may be, maybe their profile's a little bit different and you have the ability to kind of shop around a little bit. That's how I do my car insurance. That's how I do my homeowner's insurance. I mean, I like to be able to have my agent shop around a little bit. Is it kind of the same sort of parallel?
It's precisely the same thing. And we could probably even do a better job of advertising that, but our agents let people know, let us shop for you. I mean, it's in our best interest to get you the best price with the best market and the best support. And if we're tied to, the average insurance agency that's tied to the local State Farm or Liberty Mutual, they're at the mercy of that one underwriter. When you apply with us, we're gonna do the work for you, and we're gonna find you the best rate and try to leverage our volume to get some access to exclusive programs and cost savings for sure.
Yeah, and just so you guys know, at the end here, we're going to give you a special link that you can go to so that you can get more information about what Vic and his team can probably do for you as it really, whether you're a startup or you're an existing broker. So hold tight on that. We're going to give you a special link to go to. But for now, why don't we do this, Vic? Why don't we cut to the mustard here? Why don't we get to what everybody's here for? Today, we're here to talk about 3 things that every freight broker must know about their freight broker bond. So why don't you guide us through that a little bit, and then we'll see how far we can get.
Yeah, absolutely. And just kind of to set the stage, I mean, the 3 things we're going to go over that when Dennis and I were talking about this, I really wanted to provide some value to your students here and use our expertise to give you guys some inside information and a good clean explanation on some of these important topics. But we're going to go over first what the bond is, and equally as important, what it's not, because there's some common misperceptions as to what the bond does, who it protects. So I'm going to start with that. We're going to go over what a bond costs, the factors that are most heavily weighted in that, and tied to that, most importantly for your students, what you can do to save money, and then wrap things up by talking about one of the most critical elements of having a bond, and that's understanding how claims work and what your responsibility is in regards to handling claim activity and staying on top of that. But let's dive right in if you're ready.
Yeah, I'm all set. Tackle number 1. Let's go. So
the BMC 84 bond, most people that are applying for a bond have never heard of a surety bond before. They see it as a checklist item. As your students know, there's a number of checklist things you need to go through, whether it's simple things like getting your DOT and MC number. But one of them that can be the most daunting checklist item for some applicants is the $75,000 BMC 84 bond. So for any freight broker that wants to get active broker authority, they have to post the $75,000 bond. And what this bond does, and I'll get to what it's not here in a second, but ultimately it's your way to demonstrate to the FMCSA and shippers and motor carriers that you're working with that you have financial responsibility. And the bond essentially guarantees payment to shippers and motor carriers in the event that you violate some term of your contract. And most specifically, to simply put, it's making sure that you're going to pay your motor carriers on time, proper amounts per any contracts or agreements you go into. So that's what a bond is. It's important to understand what it's not, and what it's not is insurance. Most people know insurance. As soon as you drove a car, you had to get car insurance. There's a variety of different types of insurance that you're going to hold throughout your lifetime. Some are personal insurance items, and then some are for your business. When you get insurance, you pay a premium in exchange for protection for you and your business. So you pay the premium, you're protected. Something happens, a claim gets triggered. The bond company steps in, pays the claim, you pay a deductible. That's how that works in most cases. With a bond, there's a big difference. You're paying the premium, but the bond protects the shippers and motor carriers that you do business with in the event that you don't pay them. And so sometimes new freight brokers have a hard time understanding and like, well, why am I required to pay for this? And bonds are required in all lines of business throughout the U.S. at the federal, state, and local level. It's typically to provide protection and guarantee to consumers out there when you have a business that gets licensed. And in this case, the shippers and motor carriers most frequently are kind of filling that consumer role. So it's like insurance for shippers and motor carriers that you, the freight broker, have to pay for. So that's the easiest way to understand that. And the last thing with regards to defining what a bond is, at the basic level that freight brokers need to understand is if the bond company has to pay out a legitimate claim on your behalf, you are required to reimburse them. So we refer to it sometimes as surety credit. It's not, hey, oh, I don't want to pay that motor carrier, so just put a claim against my bond. The bond company will pay for it. It doesn't work that way. Yes, if you don't pay someone and you're not, complying with trying to get that issue resolved, and the bond company has to pay out a claim, I mean, that may very well happen, but they're then turning to you, the freight broker, to reimburse them. So you got to take these issues seriously. And we're the third topic we're going to get to is specifically for claims. I just thought mentioning that as getting a basic understanding of the bond would be an important piece there. But
yeah, I think that's definitely a misconception that new brokers have, right? Joining the industry, they think it's an insurance policy. What it really is a guarantee to pay, right? That's really what it comes down to. That bond demonstrates your ability, based on filling out an application and vetting you, that you will pay that claim in the event that it is a legitimate claim. Because the reality is, if you as a broker sign a contract or a rate confirmation with a carrier, and that carrier fulfills their obligations, and you, for whatever reason, legitimate or illegitimate, decide not to pay them, okay, they have the ability to file a claim against your bond. At that point, they're going to evaluate the validity of that claim, and they're going to make a judgment call as to whether they believe you owe the money to the carrier or not. Now, if they file it, if they don't have the right paperwork, if they can't prove they moved the load, if they're just trying to file some fictitious claim, you'll never have to pay for it. But in the event that they have a valid claim, you will have to come out of pocket for that, just as if you should, because if they did the service for you, then you owe the money, right? So it's really trying to prove, again, like Vic said, your capability to manage finances and have some sort of credit ability as a startup. Because the fact is that most people that are getting these bonds for the first time are startups. And, as a startup, there's risk for everybody, especially carriers. Carriers are carrying the most risk out of this whole deal, right? Even more than the brokers themselves, because setting up a broker business really isn't that expensive. So thank you for diving into that. That's important that you guys understand that. All right. So that's number one. What about number two?
So number two, one of the most common questions asked with someone that's doing this for the first time is, what does this cost? So I want to go over, to the best of my ability, an overview of what these are what these cost on average, what the current range is, and the factors that go into determining what your cost is going to be. And tied to that, things that you can do as a freight broker to try to reduce your costs, whether it be getting the bond for the first time or at renewal. So I'll dive right in. Oftentimes people want to get an estimate, early in the process, like, hey, what does it cost? There's a lot of search query in Google for what does a freight broker bond cost. It's a very difficult question to answer accurately because the range is quite large. Right now, 2021, the current prices with strong applicant, good credit, some experience, can be as low as the $900 range per year. And again, these are paid for on an annual basis typically. If you have damaged credit and other issues, the prices can be as high as $9,000 or more. So 900 to 9,000, that's a big range, especially if you're trying to properly plan for your business. And prices can fluctuate. The range can fluctuate based on a number of factors that are outside of your control as an individual freight broker, such as loss ratios in the industry and other economic factors. But right now, currently, that's a safe range, $900 to $9,000 per year. So with that said, what are the factors that are going to help determine this? The number one factor is the personal credit of the business owner. Personal credit is, people have mixed opinions on this, but personal credit is really, it's a demonstration of your ability to pay people back on time and to control your funds. Bond companies feel over time that there's definitely a correlation between the credit worthiness of an applicant and the likelihood of claims being triggered. So with that said, if you've got really strong credit, then you're going to be eligible for the better rates. And if you've got bad credit, other blemishes on there, the opposite can happen. So that's number one, without a question, personal credit. That's what the underwriters are looking at first. Secondly, while we don't ask for this, and most agencies and underwriters don't ask for this, strong personal or business financial statements can help. And I know, just like you mentioned, Dennis, most people in your course, these are new businesses. Most people applying for a freight broker bond, you're not going to have business financials if you're a brand new business in most cases. But with that said, it's possible to have dinged up credit due to medical issues or whatever it may be, but actually have strong personal financials, whether it be, liquid cash in the bank or other liquid investments. If your credit, if your credit's going through a few issues and you're applying for a bond, but you've got a strong personal financial statement, proactively provide that to the underwriter, and that can be something that impacts your price. And the third thing I wanted to cover with regards to price is industry experience. This one's not nearly weighted as heavily as credit in those first two items, but if you're in between tiers with an underwriter, you've got kind of credit that's at that borderline. Having experience in the industry, relevant experience, particularly if you've had a freight brokerage before or worked closely with a freight broker and you have years of experience, if you could demonstrate that, that's something that can be favorable as well. So those are the biggest factors that underwriters are going to review when they're determining what price to offer to an individual applicant. I will say, kind of like I started this section off with, a lot of people want to know an estimate of what this is going to cost. Personally, being an entrepreneur myself, having to go through startup costs to get up and running. If it's me and I'm starting a business and I know there's a range on one of my checklist items of $900 to $9,000, you want to get an actual quote. There's cost calculators out there, but they can be misleading, and they're relying on what you're saying your credit is, and when in reality, the bond underwriters are doing insurance underwriting algorithms, which may be a little different from what you're seeing online. And I'd hate to see someone go out there, think they're going to pay $1,000 a year, and then the quote comes back at $5,000 or more. Your best bet, if you're serious about starting this business, is to go ahead and get a free quote. You could do it through Lance Surety. Dennis and I were talking earlier about the link, which is freightbrokerbbootcamp.com/bond/BOND. And we've got a unique one-page application, very simple and straightforward. Takes about 30 to 60 seconds to complete. And we can get you a free no obligation quote. And we'll let you know not an estimate, but exactly what this is going to cost. And our quotes are valid for anywhere from 30 to 60 days. And on occasions, we can get extensions on those as well if you need more time to get started. But I wanted to reiterate how important it is to actually find out what these costs are going to be, because you get to the 11th hour and you check off every item on there, you invest time and money, and then your last item is that bond, and then you go apply and find out that you can't afford it. That can cause some headache and some heartache for individuals, and we've seen that happen. So be proactive and don't rely on those online ballpark estimates. Get yourself a free quote.
Yeah, what I see from students in most cases, because they'll give me a lot of feedback on what their bond cost was after getting started up, and I see the range. Usually, the range is usually somewhere between $1,000, $1,200, up to around $3,000. That's really consistent. Now, there are outliers where it's $5,000 or $6,000 or $8,000, but the majority of them fall somewhere in that $1,000 to $2,000 to maybe $2,500 range. And that's where the bulk of them come in. But again, if you're looking to get this started, this is going to be by far your largest cost item for checking that box and getting your authority. Of course, you're going to have ancillary costs for load boards and hiring people and whatever else you do with sales and marketing costs or whatever you're doing there. But you definitely want to shop around. And that's part of the reason why I had Vic on, because I know that, from feedback from past students, from the vetting that I've done online, making sure that, that he's been doing this for a long time. He's been doing it over a decade. I wanted to put this together as a way to try to help you guys, just make sure that you're getting the best coverage and the best rates. And so that's why I had Vic on today. And that's why I'm glad you're here, because if you go to freightbrokerbbootcamp.com/bond, here's what's going to happen. You're going to see an application, a simple application. You fill it out. I'm going to be totally transparent with you guys. In the event that, you guys choose Lance Surety Bond for your bonding, we have a referral relationship where they'll pay like an affiliate fee for that. But here's my promise to you. I want to be totally transparent with you guys about that. But here's my promise to you. In the event that we're compensated at all for anything that you guys do with Lance Surety Bond, number one, it's not going to cost you any more. And number two, I'm going to reinvest all that money back into the program itself. So we're going to reinvest that back into enhancing the training, enhancing the software, enhancing the systems, enhancing everything. It's not going to go in my pocket. It's going to go right back into the Freight Broker Bootcamp community. So that's my promise to you. But if you guys want to check that out, check out freightbrokerbbootcamp.com/ bond. Okay, that's all you got to do. All right. So number 3, last but not least.
Yeah, absolutely. We started touching on this earlier, and that's understanding bond claims. I want to make sure that all of your students understand what this is, what these claims are, how impactful they can be for their business, and what you could do to try to mitigate that risk. And ultimately, when it comes to bond claims, as we mentioned, the most common example is going to be a claim's triggered when you don't pay a motor carrier on time. So what can you do as a freight broker to try to mitigate risk? Number one, understand payment terms of all contracts you go into. I mean, that's a first that goes without saying, but as you grow your business and you go under more and more contracts, it's possible that, we're all humans, you can get mixed up, and but you got to make sure you're paying close attention to that. Make sure you have a solid broker carrier agreement, which clearly outlines the payment terms, and understand the wording of each contract, specifically when it comes to the payment terms, like is payment due upon receipt of the invoice or proof of delivery. But that's responsibility of the freight broker when you go into those contracts to make sure when you're supposed to pay these guys. The second thing I'd recommend, and this is going to come across as common sense, but it's an important thing to consider, whether you're a freight broker in any line of business, but particularly for freight brokers where claim frequency is quite high. Work to establish good working relationships with your motor carriers. And what I mean by that is in the digital age, we see it happen. I'm guilty of this myself. You can be working with someone for 5+ years and never actually pick up the phone and talk to them. And I'm not saying you have to go take every motor carrier out to dinner and establish a close personal relationship, but work on communication. When you do that, hopefully that your good faith comes to you in the event that you get caught up in something personal or you're buried in work and you're a day late on payment. You'd hope to create an environment where maybe somebody might pick the phone up the day after something's due and say, hey, where's that payment? Certainly don't want to have that be a repeat occurrence where they're having to call you all the time, because no matter how friendly you are, eventually they'll get fed up. But you hope to get the benefit of the doubt from the motor carriers you're working with, and establishing a good working relationship with them where they know you as a person and not just a bunch of letters on an email. That could definitely make a difference as well.
Yeah, I agree. Let's talk about that for a second, because here's the thing that you have to understand as a new broker or an agent is that you really have 3 customers as a broker. Carriers are actually in a way customers to you, right? Because without those carriers, you're not going to move any freight. So you should treat carriers just as well, if not better, as you treat your shippers, which is the second group of customers, right? So you've got shippers, you've got carriers, and then the third one I always consider is employees, people that work for you. These are people that you have responsibilities to, right? So you're in a partnership, you're in a marriage, you're in a relationship. So pick up the phone, exactly what Vic said. Develop a relationship. You should be treating your carriers just as good, if not better, than your shippers. So, I know tons of brokers who like to operate just through email or just through voicemail or just through text or just through digital. But the fact is, the power of picking up the phone and actually developing a relationship, not only will it potentially prevent a lot of these claims, but it'll enhance your relationship and allow you to do more with that carrier, right? Maybe you're moving 1 lane or 2 lanes, but because you haven't taken the time to actually develop a relationship, there's a whole set of tools and resources and opportunities that are sitting there with that carrier that you don't even know about because you're keeping everything at arm's length. So develop strong relationships with those carriers. Develop strong relationships with all your vendors. I don't care if they're software providers. I don't care if they're surety bond providers. I don't care if they're motor carriers. I don't care who they are. Develop strong relationships with them. And when issues do come up, that phone call is going to save a lot of hassle and a lot of grief. Okay. So no, I appreciate you diving into that. I think that's really important. So Vic, is there anything else you want to share before we jump into Q&A?
When it comes to one more point on claims, and thanks for elaborating on that. That's it's a really important piece. And again, it does seem like common sense talking about the establishing good relationships, but it's kind of the sign of the times. A lot of people get comfortable with email. So
sometimes common sense is not real common.
Yeah. Well, I was the last comment on claims. Sometimes if you do things the right way and you establish good relationships, you pay people on time, you're hopefully not going to have claim activity. But even some of the best freight brokers that we represent, they're not immune to claim activity. So sometimes it's not just a matter of if, but when a claim might be filed against your bond. And sometimes these aren't legitimate, as you hinted at earlier. There's some things that are excluded from the bond, like interstate commerce is covered by the bond, intrastate is not. But if you do have the unfortunate event of having a claim placed against your bond, it really helps to have an advocate, especially if you haven't done this before and you have no experience holding a bond or navigating through the claims process. Most bond agencies out there have zero involvement on the claims. They take your money and they take your premium, they get your bond filed through the carrier, and then next time you hear from them will be when your renewal is up, when they want more money. We at Lance Surety actually have a full-time claims manager. We've had him for the past 5 years. We identified that there was a way we could add value to our customers based on the frequency of claims to try to help them navigate through the process. And he's not a miracle worker. He's not going to pay your claim for you. He doesn't have any magic phrases that just make them disappear. But what he does is facilitates communication and can help serve as your advocate to the bond company. And that goes a long way, because depending on where you get bonded, the motor carrier that's putting a claim against your bond, they put a claim against your bond. They're not necessarily picking up the phone and saying, hey, by the way, I just put a claim against your bond. Sometimes they might, but oftentimes they don't. If you're waiting on like $1 billion insurance company's claims department to, reach out to you proactively and lay everything out in a calm, legible format for ahead of time so you can squash it before it becomes a problem, that's a risk. So our claims manager is very proactive, connected with the claims managers at the carriers to really push anytime there's a claim for any one of our clients' bonds to get that information. Oftentimes the freight broker had no idea that there was a claim, and many times it was the load was already paid for or whatnot, and they provide documentation and it just gets either rejected or the whole issue gets resolved. But you want to be careful when you're applying. Yes, you want the lowest price out there, but you also want to be, aware of what am I actually buying and what service is that agency providing, aside from just getting my bond filed with the FMCSA for me. Because again, if a claim happens, it's nice to have an advocate there who knows what they're doing to help support you. So to summarize claims, you never want to have a surety pay out a claim on your behalf. If you do, your bond's very likely going to get canceled and you may have difficulty getting bonded again. And two, tied to that, do everything you can as a freight broker to try to avoid claim activity, doing the things we mentioned, and just trying to stay on top of your business, pay people on time, and do things the right way. So that's, I know I was long-winded, but
no, that's fine. Perfect.
Those are the key points that I wanted to make sure we got through to your students.
All right. So here, if you guys are curious of what your bond is going to cost and you want to get an actual quote from someone who represents multiple carriers that do these broker bonds, go to freightbrokerbootcamp.com/bond. You're going to get a link to an application. It'll take you probably 60 seconds to fill it out. And then Lance and his team are going to get in touch with you and discuss exactly what that looks like for you in your business based on your exact profile, where you stand today. So you don't have to guess on what that cost is going to be. Again, if you're already a freight broker and you're curious if you are paying too much, feel free to reach out to Lance too. Also through that application, he'll do the exact same thing for you. And for those of you that are curious, if you're sitting here and maybe you're a first timer, or you've been listening to some of these lives or watching some of these videos, but you have yet to really understand what freight brokering is all about, and this stuff's flying over your head, and you want to become a freight broker, freight agent, check out freightbrokerbootcamp.com. We've trained over 10,000 students, been in business over a decade. We offer a 60-day, 100% money back guarantee. So you can definitely check that out. Absolutely risk-free. So again, thank you for joining me, Vic. Now we're going to dive into some Q&A. So, all right. So we're going to do some Q&A real quick. But before we do that, I'm going to grab a drink. Those of you that have questions, all right, what I want you to do is go into the chat box. I don't care whether you're on YouTube or Facebook or wherever you're at. Type in your questions. We're going to try to get to as many as we can. All right. I can't promise that we're going to get to your question today. If we don't get to your questions today, I apologize. Vic he's got a business to run. He can't sit here for 3 hours doing Q&A, but maybe we can come back in later and respond in the comments. But type your questions into the chat box. Now, those questions can be for Lance as it relates, or for Vic as it relates to bonding or any of that stuff, or claims or any of that stuff. Or you can ask me any questions you have about freight broker startups or otherwise. Okay. So what's your questions, guys? Let's hear it. Let's see here. What do we got? They process transfer sale. I want to make my net. Okay. And industry, I think I could develop. Okay. All right. So here's a question, more generic question. I met with my first shipper. They process, transport steel. Okay. I want to start my niche in the dairy industry. I think I could develop a relationship with a steel company. Should I change my niche? Okay. Well, Marvin, that's a really hard question without sitting down and having a conversation with you. First of all, you're on the right track as you're focused in on a niche. Okay. I like when you start in a specific niche. I don't care if it's the dairy niche or the steel niche or the building supply niche or the produce niche or whatever niche it is. I don't care which one it is. They're all viable. Okay. They're all viable niches. The fact is you got to find what you enjoy to do, what you enjoy, maybe things you have background in, or where you see opportunities. So I don't know if you should switch your niche. I can't answer that question for you. Here's what I know. There's a lot of people that make money in both of those industries, right? In both of those niches, the dairy and the steel niche. I personally have a lot more experience in the steel niche. So that's where on a personal level, I lean towards that because I know the opportunities that are out there, but it's also can be very competitive. So I would say do your due diligence from the perspective of looking at what is the market size, what's the opportunity for your niche, and then look at the carriers that are involved in that niche based on the specific equipment. Look at the rates, look at availability, look at the load to truck ratios on the different load boards, and try to get a sense or a feel as to what's going on in that niche. Is there a huge drought of equipment like there are in some niches right now? Or is there a good load to truck ratio? That's going to make your job a whole lot easier. Okay. So, those are some of the variables that you might want to look at. But again, both of those are niches, and I don't think you could go wrong with either one as long as you do a deep dive and you really focus on that, developing those niches out. So I hope that helps, Marvin. See what we got. All right, scrolling. All right, so we got a two-part question here. Can you mention credit scores range and their expected bond prices? You've never had that question before. And must the LLC be established prior to getting the bond? Have at it.
All right, so two questions there. The first question on the credit score ranges, I can do my best, but it can be, like I mentioned earlier, it can be a little misleading because, again, what you see online when you view your credit or what you believe your credit to be, it may not be what the bond underwriters are going to see. So typically, good credit is kind of 650 plus. Dennis kind of hinted earlier, the range that he was hearing most frequently was the 900 to 1200 range, and then kind of the next tier being up to $3,000. So if you got 650 plus clean credit, no substantial past due items on there, everything's in order. I mean, you can expect to pay most likely between that 900 range when you also have good, experience as well, to as high as 3,000 per year. There can be some exceptions, but that's a safe estimate. When the credit drops below 650, particularly when you get into the 500s, there was a time 4 or 5 years ago when there was like mid-tier markets, but those due to loss ratios, there aren't as many mid-tier range, price offerings at this point. So if you're in the 500s, or below, I mean, you're often in the 7,000 or higher range. And we have seen people, and it's not just us. Again, we work with a number of the top writers and a bunch of different bond companies, but there are occasions where people just don't qualify based on the credit. Wasn't the case 5 or 6 years ago. I mean, we kind of put our hat on, hey, we can get everyone approved, but yeah, that's a safe range. Good credit, 1,000 to 3,000 per year. Experience can dictate whether you're on the low end or the high end there, and also how strong your credit is. The next question, must you be an established LLC prior to getting a bond? That depends on how you want to structure your business. I mean, LLC is one type of business you can create. I mean, there's sole proprietorships, there's corporations, there's partnerships. If you decide to go the LLC route, which is great, what's important with regards to getting the bond is how you're set up with the FMCSA. If you're planning on getting yourself set up on the safer site with your motor carrier number, the DOT number as ABC Transportation LLC, you'll want to make sure whatever you put on the bond that's going to properly reflect, because your bond gets electronically filed with the FMCSA. So It's likely a good idea if that's how you want to be set up with the FMCSA to go through and get that established. You can get a quote at any point in time prior to establishing the LLC, and you could purchase the bond as well. But when you buy the bond and you pay that first year premium, we then in turn have to get electronically filed, and you just want to make sure that everything's lining up properly and accurate. Dennis, was that a
no, that was
good
perfect.
answer?
Yeah, that was perfect. As in regards to the corporation or LLC, I highly recommend that all of you, if you decide to become a freight broker and you're going to get your freight broker authority through the FMCSA, definitely get a corporation. There's huge benefits to it, particularly from a liability standpoint, right? From a potential of being sued or having any other lawsuits or other liabilities. So have a corporation. I can't tell you whether you should get a C Corp or an S Corp or an LLC. They're all viable options. Most people do get either an S Corp or an LLC of some sort typically, but you can do some research on that, talk to your accountant or whatever before you do that filing. There's tons of information online about that, but you're definitely going to want to get a corporation to run your brokerage through. And like Vic said, that corporation is going to be how that corporation is set up on your freight broker authority is the exact same language and information that you're going to want on your bond so that they can actually digitally transmit it to the FMCSA to validate your bond, because that's how it's going to work, right? You're going to file your application, you're going to get your bond, then they're going to connect. And then once that happens, then they'll deem your authority active. And then at that point, that's when you can start brokering freight. So thank you for clarifying that. That's great. Yeah. And I do see, exactly what Vic is saying in regards to the credit. If you have, 650, good 650, 700, 750 credit, you're in great shape, right? If you have 500 credit, you can still get a bond or in the 500s, but it's going to be more expensive. That's just the way it is, right? And the good thing is that as your credit improves and you renew your bond, then you're going to have an opportunity to get re-rated. Is that correct?
That is correct. And as you were talking, Dennis, it reminded me. I wanted to add one point when we were talking about personal credit and the cost of a bond from our the prior discussion, and that's, you can improve your credit. First and foremost, you need to understand what's on your credit and what's holding you back. If you have damaged credit, get a copy of your credit report. Work to get that stuff paid off, because sometimes people are shocked to know, wait a second, what's showing up on my credit. It's unfortunate. Sometimes you can work with companies. Sometimes you can do it yourself. If you're under a time crunch and you really want to get your credit improved, there are companies like credit repair agencies and credit service organizations that are out there that specialize in helping to expedite getting issues resolved and cleaned up on your credit. But credit's not something, unfortunately, that you can necessarily fix in a 24-hour period. Sometimes it takes time. But some people that have bad credit that are really eager to get started with this freight brokerage if they get higher pricing, they sometimes have to bite the bullet year one and work feverishly over the next 12 months before their renewal to get themselves a much more affordable price. And we see people do that all the time.
Love it. Okay, great. Let's go on to the next question. All right, so this is one for you, Vic. Difference between a BMC 84 and a BMC 85.
Great question. We have some content on our website on that as well, because so many people ask and so many people confuse the two. The BMC 84, you guys, after listening to today's interview, have a good idea on what that is. It's regulated by the Department of Insurance. You're going to a bond company who's providing a financial guarantee on your behalf to the FMCSA to the benefit of the shipper motor carriers you work with. The BMC 85 is a trust fund, and those can look a number of different ways. But the basic idea behind a trust fund is you're taking $75,000 of your money and putting it into a trust. You can do that various ways, sometimes through a bank by having them, doing like a ILOC, irrevocable letter of credit, and you're holding up those funds. But they're not regulated right now by anything I'm aware of, other than the FMCSA, which they have a challenge. I know there's been some litigation over the past 5 years or so with some of the BMC 85 providers, people claiming that they were writing policies but didn't actually have the funds. If they write a BMC 85 trust fund policy, they have to have $75,000 set aside for every single policy. So I don't want to sit here and bash, because technically that's a competing product of what we offer, but we feel for a variety of reasons that the bond is superior because, one, you're not having to tie up $75,000 of your money when you likely need that. If you have that, you likely need that to help generate business for you and spend it in other ways than having it tied up in a trust. The bond, especially when you have good credit, is a much superior option where you can pay low premium each year and hold on to your money. And if you don't have that money, then the bond may be really your only option. But
yeah, so when I tell you a funny story, you don't want to bash the trust holders, but I will. So personal story, I didn't even tell you this, Vic. When I first started my brokerage back in 2003, we had capital. We weren't scratching our leg. We didn't have unlimited capital, but due to recurring annual costs, the trust was cheaper from a recurring cost perspective. So we actually, at that time, it was a $10,000 trust, right? Because it hadn't moved to 75,000. So we actually did a trust when we first started. We did a BMC 85 $10,000 trust, and that worked fine for several years. And then when the law changed and we had to convert over to a bond, we reached out to our trust provider, and come to find out that they never refunded our money for that trust. So we lost that $10,000 trust.
Wow.
So we never got that. We never recovered that money. Unfortunately, it would have cost us more to pursue it in legal costs than the $10,000 was worth. So we had to walk away from that $10,000 that we had. We had that trust for several years. And I'm not saying that all trust companies are going to do that. I'm just saying that the one that we chose, the one that we had for numerous years, never gave back that bond money, or not the bond money, the trust money. And then so we ended up moving over to a surety bond, right? Which when it went to 75,000, which was that new legislation back 2013, right? And then we never had any issues with that provider. But ultimately, you do have the difference between the two. You can choose. But again, tying up your capital, even if it was still only $10,000, right? Which it isn't, it's 75,000. I think most people are not going to choose to do that. They'll pay a teeny bit more on the recurring cost for a surety bond versus tying up all that capital. So that would be my choice. So it's completely up to you guys, but that's definitely the difference. So good question. And thanks for tuning in on that. All right. Okay. Question from Marta. At what point does a broker send a welcome package, including copies of bond, contingent cargo, et cetera, to a shipper to be set up as a vendor? After a freight quote is approved by the shipper, after a phone conversation with the shipper? Well, there's no hard and fast answer there, right? So sometimes when you get on the first phone call with a shipper, they're going to say, send me over your information. They're going to say, send me your information. And what they want to see is they want to see that you have your freight broker authority. They want to vet you a little bit before they spend any more time with you. That's going to happen quite frequently, right? On a first call, if they decide that they want to have a second call with you or get a quote, they're going to ask you for your credentials. And at that point, that's when you're going to send them over your authority, your bond, and whatever other, if you have contingent cargo or whatever other documents you want to send over to them. Sometimes that happens on the first call, but it definitely should happen before you start doing business with them, right? So somewhere in that process, it usually happens on the early side with most shippers because they don't want to waste time working with someone that they haven't really had to vet, right? You got to understand, most of these shippers get a lot of phone calls. So if they do ask you for information, it's a buying signal. It's a good sign. Now, they may end up blowing you off because that's sometimes what people do is say, send me information. But you should follow up. You should have a shipper packet that you can send to them, which again, that's going to include your authority, a copy of your bond, any other information you have, contingent cargo, any billing related information, accessorial charges, maybe even if you have a shipper carrier or shipper broker contract, and any other collateral material you want to have in there that helps to make a good first impression. That's what's going to be a part of your shipper packet. You should have the same thing for carriers as well, right? Which is your carrier packet, because the carrier is going to want to make sure you have your broker authority. Of course, they're going to want to make sure you have your bond for all the reasons we've talked about today. So you're going to want to have both of those. So I'd say it's going to happen pretty early, usually as a part of the vetting process before they waste any time trying to get quotes from you. So hope that helps. Let's see. All right. So how can I build my brokerage credit? I can jump into that, but Vic, do you have any comments on they're already a broker. They're already set up. They're already running their business. How do they build their broker credit? And sometimes these answers are within the answer, but go ahead, or within the question.
Dennis, how do you view this question? I mean, when you say brokerage credit, are you talking about that broker's personal credit, or
we're talking about the brokerage's credit? A lot of times what happens is, and what's stimulating this question, I believe in most cases, is they get their freight broker authority. They start getting some loads from shippers. They post those loads on the load board, and then carriers call them and say, well, you're brand new. You don't have any credit. We can't run with you because our factoring company won't factor your invoices because you're brand new. And so a lot of times brokers will get turned away by carriers, and then that can't cover that load, and it affects their business. It's just like every other business in any other industry where you're establishing credit as a company. When you first started, Lance Surety Bond and Associates, you didn't have any credit, right? I mean, you didn't have anything. You started with a piece, a phone, a pen, and a piece of paper, right? That's what you had, and you had to build it from there. So the way you build credit is no mystery. Pay your bills on time. You have to pay your bills on time. Now, the way you can get the real question that you're asking me behind the scenes is, how can I get carriers to run with me before I have good credit, right? Before the load boards reflect that I have A or B credit. Well, the way you do that is offer quick pays, offer fuel advances, offer better terms, right? Offer better terms, and focus on relationship over transactions. I've said this a million times. We talked about it earlier. Most brokers are very transaction oriented. They're all about the transaction. They're not about the relationship. So it doesn't take you being some charming, overwhelming salesperson in order to develop a relationship with carriers, because most brokers don't take the time to do it. So if you spend time with that carrier, developing a relationship and focusing more on the long term as a partnership, there's a much higher likelihood that they're going to actually move the loads for you. But if you just look at this as a one pick, one drop van load going from A to B, and I'll pay you X, well, guess what? That carrier can get that from any number of people. They don't need you. They can get loads from anybody. But if you differentiate yourself, right, as a broker, and you sound different and you act different and you focus on different things, then not only shippers are going to react to you differently, but carriers are going to react to you differently. And remember, they're both your customers. If you don't have carriers, you're not going to be able to move loads. And if you don't have shippers, you're not going to have any loads to move. So you have to treat them both the same in order to be an effective broker. So, the obvious, paying your bills on time. The other obvious is giving better terms if you really want them to haul for you. The other thing you can do is you can actually get credit references from carriers that you do business with that will haul the loads. And then you can submit those to the load boards. And they will then adjust your credit, from N, which is new a lot of times on the credit reports or credit boards, like load boards, like Truck Stop. And if you submit 5 references, a lot of times they'll move that to a B or an A credit, at which point most carriers and or factoring companies are going to start doing business with you. The other thing you can do is you can actually reach out to the factoring companies and introduce yourself, get a profile set up, let them know you're a new broker, ask them what you need to do in order to get a small credit line. And then the next time one of their carriers that they do business with, reaches out about a specific load, you're already set up with them. You got to understand, out of all the factoring companies out there that specialize in transportation, there's probably 10 that do 95% of the business. There's probably 10 factoring companies that control 95% of the business out there. Okay. So if you just reached out and got set up with those 10, you're going to cover the majority of carriers that are getting their invoices factored. Now, I'm not promising they're all going to give you credit, but here's what I'm going to promise you. If they don't even know you exist, I promise they're probably not going to give you credit. Okay. So it takes a little bit of work. I had an interview with Elio Longoria about this not long ago. I think it's on the YouTube channel where we talk about building your broker credit. So if you want to check it out, maybe you're on YouTube watching this, or if you're not, go to youtube.com/freight brokers. And then you can search in there, build freight broker credit. And I think that's going to come up. That's an interview I did with Elio, because as a startup, he was able to do, I think he did over $7,000 in his first 5 days of business. And he used a lot of these strategies to get carriers to start doing business with them. And then he was able to build his credit very quickly. And he walks through that entire process. So I would definitely check that out. Let's see, what else? All right. So, Eric, Thal asks, can a bond be lower than 900 or is that the lowest? That's the lowest I've ever heard of.
Well, I mean, the answer to the question, yes, it just depends on the applicant, and it depends on if there's a carrier at that point in time willing to write it. The lowest rate I've ever seen is $750, and that was when the credit was excellent. They also provided business. The only person writing, or the only carrier writing that or offering that rate was requiring business financials and or personal financials. So it was a more in-depth process for people that are more established. But yes, that rate exists. I'm not aware at this moment in time, like today, of anyone writing that, but it's been a rate that it has been available for extremely qualified applicants that are experienced. But not often is that kind of price being offered to a new freight broker. That's why I didn't want to be advertising that price because it's not a common thing, and it's we don't really see those prices currently, but it is a price over the past few years that we have seen on very rare occasions.
And here's the way that you can find out what your bond is going to cost. Go to freightbrokerbootcamp.com/bond. You're going to see a really quick 60-second application you can fill out. At that point, Vic and his team are going to be able to tell you or give you a really strong estimate on what your bond is going to cost. They're going to give you a quote on what that bond is going to cost. It's cost you $0 to request the quote. Obviously, I don't want you to waste his time if you're not serious. But if you are serious about getting your authority, getting your bond, or changing bond providers, just go to freightbrokerbootcamp.com/bond. Okay. All right. Let's see what else we got here in regards to questions. Scrolling through here. Give me a minute. Okay, so here's a question. Hello, all. I'm looking to be hired as a freight agent. Would a bond look better to a prospective carriers? Well, as an agent, you won't be able to get a bond. Okay, you don't need a freight broker bond, nor will you be able to get a freight broker bond. Okay, so what you're going to look for as an agent to make you look better if you're trying to look better to shippers, then you're going to want to find a freight broker that has an online presence, has some history, has some credit, has some technology, has some brand awareness, right? If you're an agent and you're looking for a provider, those are things that are going to help you when you start reaching out to shippers. Now, if you're an agent looking to get hired as an agent and you haven't been able to get connected with an agent for whatever reason, maybe you haven't reached out yet, or maybe you don't have a lot of experience, or maybe you don't have a customer base, or what they call a book of business. Here's what I recommend. I just launched my brand new freight broker and freight agent job board. I don't even know if Vic knows about this, but I launched it's jobs, or just go to freightbrokerbootcamp.com/jobs. And what it's going to do is it's going to bring up a job board. And that job board allows all of my students that have in the past, current, and in the future that become freight brokers that want to hire students of Freight Broker Bootcamp, or want to hire people as freight agents or dispatchers or freight salespeople, they can actually post their jobs there for free. Okay, it costs you absolutely $0. You can post your job for free. And if you're looking to become an agent, or maybe even a freight broker working inside of a brokerage, or a dispatcher or a freight salesperson, you can apply for jobs through that job board for free. It's the only one I know of in existence that's exclusively dedicated to freight brokers and freight agents. We just launched it maybe about a month ago. It's growing like crazy. There's tons of jobs on there available. Some require experience and customers. Many of them do not require experience and customers to become a freight broker or freight agent. So check that out. It's freightbrokerbootcamp.com/jobs. Okay, you can check that out. Okay, here you go. Question for you, Vic. Hi, I already have bond insurance. Can I switch it if I find a better rate before the end of my term? I don't even know the answer to that question.
That's a good question. It's a very good question, and the answer to that is, in most cases, no. Once you buy a bond for a term, at least in the first year, the premium is fully earned for that full 12 months, and that's the way most carriers view the bond. It really what you're asking is, can you cancel it and get a prorated refund from whoever's writing your bond? so you can get that money back and then go get a bond from someone else. If you have a bond carrier that's willing to offer a prorated refund, which keep in mind, any prorated refund is going to take into account like a 30-day cancellation clause, because once the bond's canceled by them, the carrier's on the hook for another 30 days from the date of cancellation. So if you reach out to them and they're willing to give you a prorated refund, some carriers are willing to do that after the first year. So if you're in your second or third year and you're 2 months in to that next term, typically minus the cancellation 30 days, most will give a prorated refund. But if you're in year one, most carriers are not going to give a prorated refund. But we see that happen quite regularly, where somebody gets a bond and then they get some mailer, or they hear from a friend like they paid less and they go, oh geez, I want to go with that person. It really all comes down to whether you're currently bonded with, what your agreement is with them, and what they're willing to do for you with regards to a refund.
Yeah, that makes total sense. And if you already have a bond and you're already operating as a broker, and maybe you've had that bond for 3 months or 6 months or 9 months, I mean, you could still develop a relationship with Vic and his team before you need the bond, and you'll understand what that cost is going to be when your renewal comes up. And at that point during the renewal, you can always switch. Maybe you like working with Vic and his team better. Maybe they offer you better rates, maybe whatever the case may be. But my suggestion to you is, if you think, based on what you've learned today, that you're paying too much for your bond because maybe your credit wasn't as good a few years ago and now it's a lot better and you've got a lot more experience, then reach out to the team. Just go to freightbrokerbootcamp.com/bond, fill out the application really quick, whether you're new or you have an existing bond, and check it out. I mean, that's all I can tell you. That's my strongest suggestion. There's not going to be any upfront charge. There's no charge for running a quote on this, right, Vic?
No, there's not. And I didn't mention earlier, but we're one of the only agencies that can get you a quote without a hard credit pull. We're able to get approvals with soft credit pulls, which are not going to adversely affect your score. So I'd recommend anyone that's up for renewal, unless you're blown away with the service and very confident that your pricing is solid. It's always good to get a second opinion. Hit us up. Apply through Dennis's link, and we'll go to work for you, and we'll find ways to save you money. And worst case scenario, if you do have the absolute best price on the market, we'll give you peace of mind and letting you know that you're in a good spot. Otherwise, we'll save you money.
Love it. Perfect. All right. What's next? Okay. Boom, boom, boom. Separate freight broker business. Okay. So here's a question. Dakota 0412 Tyler asks, if I own a transportation company already, would it be okay to create a separate freight broker business, or should I implement it into my current transportation business? Okay. So this is really a personal choice, and this is something you're going to have to do diligence. If you're already a carrier, right, and you've got trucks, or maybe you've got owner operators leased onto you, but you've got your carrier authority. One of the biggest costs you have as a carrier is your cargo and liability insurance. Okay. So that's what you're going to want to be very careful of. In the event that you launch your brokerage from within your carrier business, you're going to want to be careful that it's not going to impact your carrier insurance, right? I have heard from students in the past that when they tried adding brokerage to their carrier business, it impacted their carrier insurance cost. So a lot of times what you'll have carriers that want to become brokers. They'll set up a separate LLC or a separate corporation. It'll be a very similar name. So if you have ABC Transportation, now maybe it's ABC Transportation and Logistics, which is your brokerage, right? Now those are two different LLCs. You're going to have two different MC numbers, and you can operate it that way. That also affords you some other opportunities down the road in the event that your carrier business runs into financial issues. It's not going to impact your broker business. In the event that you want to sell one business or another business, it's going to be a lot easier to separate those out because they're going to be separate businesses. So there's a lot of advantages to it, not a lot of disadvantages. Just be careful that if you do decide to open a brokerage under your carrier corporation or under your carrier entity, that you're careful that it does not impact your cargo and liability insurance on the asset-based side. So that would be my suggestion to you. Did you have any feedback on that, Vic, or did you have anything you wanted to add to that?
No, I honestly, that's a little outside of my expertise.
Yeah, I wasn't sure. I just saw your eyebrows grow up, and I thought maybe there was a situation where you had heard before. Let's see, what else do we got here? This Bond guy is great. Awesome. Yeah, I think he's great too. That's why I had him on, because he knows more about bonds than he's forgot more about bonds than I ever knew. Let's see. Boom, boom, boom. I'm scrolling. Give me a minute. Okay. So here's a question from Bombay Montre. Is there a specific form needed to show your bond as active? How does that work? Walk them through the process of how, once they get a bond with you, how that works.
No, absolutely. Another very good question. We get this question a lot, especially we got it a lot more going back to the transition, from things being electronically filed with the FMCSA. But when you get a bond, the FMCSA, Federal Motor Carrier Safety Administration, it's getting filed with them electronically on their Safer site. It gets posted there, and that kind of, among other checklist items, once that bond's posted, it enables you to get active broker authority with them. So you can view your bond as well as insurance and anything else you have posted to the Safer, posted with the FMCSA. You can view it. Anyone can view it going into the Safer site. So if someone you're working with wants to know whether or not you're bonded and they have experience, they should know they can see it on the Safer site. Sometimes they'll accept you can just print a copy of the Safer site or send them a link. But what we do, and I don't know about what other agencies do, I know not all do this, but we can sometimes provide a hard copy of the bond as well, utilizing the BMC 84 form. But keep in mind, the bond itself, it's getting electronically filed. But if you have people that are demanding, I want a copy of your bond, especially those guys that are old school, that maybe aren't in love with the everything going electronic, that have been doing this for a while, and they're used to for decades seeing a physical copy of a bond, contact our agency once you purchase, and we can print you off a copy as well that you can provide. But again, not every agency does that. I'd venture to guess most agencies don't do that based on some of the feedback we've received. But does that help answer that, Dennis?
Oops, sorry. My audio must have been off. I'm sorry, guys. So Tej Singh says, I have a BMC 85 trust. We pay a yearly fee, but we do not have 75,000 of our own money tied up. Is there a risk we're open up to with this? So they have a trust, but they don't have to have that money tied up. What's that? Talk to us a little bit about that.
Yeah, and this is a different variation of the trust. It's definitely not a bond. It's the BMC 85, but this is a less traditional one that you see where a company's basically saying, oh, well, we've got $75,000 set aside for you of our money, and we're going to charge you a annual or quarterly premium. What I would suggest in this case is you need to have them confirm to you that they have necessary funds to cover your bond policy and all bond, or not bond policy, but your trust policy and any other trust that they're writing, because we've seen trusts go out of business and people left with no recourse to get any type of refund. And that's somewhat what some of the litigation I was hinting at earlier has been about, was whether or not these trust providers, who are somewhat unregulated, if they're not regulated by the Department of Insurance, but whether or not they have sufficient funding to properly cover claims. And again, if you have a trust, they need to have $75,000 set aside for your trust and every other trust that they've written, So, and if they don't, that would be a significant red flag in my opinion. And again, I'm not in the business of bashing the competition. I'd rather kind of stand on our own laurels. But that you're not necessarily at risk. So as they're operating things the right way and have the necessary funding, which unfortunately has not been the case for all trust providers over the past decade.
Yeah. So here's my suggestion to you guys. It never hurts to ask. Okay. If you have this provider and you have concerns that they're giving you the coverage that you need and you're doing the risk management needed to manage that relationship and that requirement, because again, if they go out of business, right, and they can't provide your bond anymore or your trust anymore, and you have the potential of losing you're going to lose your freight broker authority if you don't have a trust or a bond. Okay. So just get on the phone and ask them, say, listen, why is it that every other provider that does trust requires us to have that, $75,000 on deposit or some sort of letter of, some sort of guarantee on that? How is it you guys are able to do that? And let them explain it to you, right? Let them explain it to you. Maybe they'll say we have, billions of dollars and we have that set aside in some sort of a escrow that I don't know what they're going to say. But when they answer that question, if they stumble and they don't give you a really good, solid answer, well, then that's probably maybe is reaffirming your suspicions a little bit. I'm not here to bash the trust companies, but I'm here to help try to protect you. And that's part of the reason why we had, Vic here today, is to try to help educate you about that. I told you the story. I lost 10 grand of my own money. Okay. I lost 10 grand with a trust company that went insolvent and eventually went out of business, and we never got the money back. We had to switch to a surety bond provider, and then we never had any issues. So I told you my own personal story that happened to me. That's 100% true. And I wish I had that 10 grand back, but there's no way to get it back. So yeah. So listen, guys, we're going to wrap it up for today. First, I want to thank Vic for coming in and joining us and sharing his expertise and taking all this time. We've been on here over an hour. This is lasting a lot longer than most. So thank you for that. Appreciate it, Vic.
Yeah. Thank you, Dennis. This was a lot of fun. I appreciate the opportunity.
Yeah, maybe we'll have you back in the future. But for those of you that want to get a freight broker bond or want to get a quote on a bond, you got the link right there in front of you, freightbrokerbootcamp.com/bond. You go there. It's going to redirect you to a short application. You can fill it out. And for any of those of you that are curious about becoming a freight broker or a freight agent, and you're looking to get started, maybe you're trying to hobble information together with Google and YouTube and Facebook and all these different groups, and you're trying to compile all this information. Why don't you just save yourself a bunch of hassle and a bunch of time and check out freightbrokerbootcamp.com. Trained over 10,000 students, been in business over a decade, and we offer a 60-day, 100% money-back guarantee. It's ironclad. If you're not happy for any reason, just send us a message, and we'll refund 100% of your purchase price. Again, I want to thank you, Vic, for being here. I want to thank everybody for joining me. Again, I do these every Monday at noon, these Freight Broker Bootcamp lives. If you want to see replays of these lives or you want to see other free training videos, check out my YouTube channel at youtube.com/freight brokers, or you can just go on YouTube and search Freight Broker Bootcamp, and you'll see my shiny bald head somewhere in the thumbnails, and you can just click on it and check out those videos. Again, Vic, thank you for being here. And everybody else who's joining us live from wherever you are or catching this on replay, make sure you like, comment, and share the video. Appreciate you all being here, and we'll talk again soon.
Thank you, Dennis. Good luck, everyone.